This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So I recently ran a screen of Ben Graham's stocks here on the Value Investor Podcast, and it's in the episode asking whether or not you should read the Intelligent Investor book. And I mentioned in there that Zacks has these guru screens, but they're not on Zacks.com screening tools. They are on our more advanced Research Wizard tool that is mostly used by financial advisors and professionals in the industry. So we normally, don't get access to that if we're only on Zacks.com. But I do have access to it. So I have run the various guru screens on there in the past, but it's been a while. I kind of forget that they're there until I did this one on Ben Graham and I ran the screen there. And I did mention that we do have a Warren Buffett screen on those lists of guru screens. Some of the other gurus are like Peter Lynch was on there, and a couple others, Joel Greenblatt, others that you would recognize. And so I really should be using these screens more because I have access to them and I know you don't, but we all want to see what are the stocks that these screens are giving us. So I did run the one on Buffett because it had been a while. And I do remember that it normally doesn't give you that many stocks when you run it. It is a more complicated screen. It had, I don't even know, like 8 to 10 different components to it. And I'm not going to give all the components here, but it did have the ROE, the ROI was on there, cash flow over equity was on there, the price to book ratio. What it was missing, much like the Ben Graham screen, was there's no Zacks rank on there. So we're not concerned whether or not it's a 5, a strong sell, or a 4, which is the sell, because these stocks, if you're looking for Warren Buffett, he's a buy and hold investor. He's looking for longer term. And those stocks, it doesn't really matter as much what's going on with the Zacks rank. Now, that being said, I do like to use the Zacks rank to uncover hidden gems and companies that are seeing something good happening with their earnings right now. But remember, this rank is highly volatile. It can change daily. In fact, we run it almost daily. And it's very specific to earnings estimates, revisions especially. And so whatever's going on with those, especially during earnings season, it'll show up in the rank. So that's why the rank is really just a short-term trading recommendation of 1 to 3 months. And some of these value gurus are longer-term investors. So those screens are not including the rank. So just FYI on that. So I ran this screen and it returned just 3 stocks. Yes, very slim pickings. And if you recall the Ben Graham screen that I just ran, it was only a week ago here in September 2023. That one had 18 stocks on it. So this is a much more complicated screen. And I guess you could say it's only seeking the very Buffett-like stocks, the very best of the Buffett-like stocks. So what are these stocks? I am going to talk about all 3, obviously, because that's all we got returned here. But 2 of them are from the screen from Ben Graham that I just ran a week ago. And there are 2 that I actually did talk about, but I'm going to talk about them again because some of you might not have listened to that other podcast, and or you just don't remember what stocks were in there or whatnot. So I'm going to cover all 3, but these are all cheap stocks and in 3 different areas, industries. So let's dive right in. So the first one is PRDO. Am I saying that right? PRDO Education. I've talked about this one before on various podcasts. The ticker is P as in Paul, R as in Robert, D as in David, O, PRDO. And if you remember, this is the online and campus-based education company. They own Colorado Technical University, CTU, And the American Intercontinental University program, they offer degrees from associates all the way through doctoral. Again, not all of it is online. Some of it is campus-based. They have a market cap of just 1.1 billion, so very small cap. I took a quick look at the second quarter results that they gave in early August. Revenue was up 11.3%. It was driven by an 18.7% increase at CTU. Total student enrollment, however, fell 5.2%. AIUS was down 14.2%, and CTU was flat. They did declare an inaugural dividend, though, so they're now a dividend payer. It was 11 cents for the quarter, or 44 cents for the year, and that is a yield of 2.6% right now. They have a great balance sheet with a lot of cash, and so, they are starting to give that back to, the shareholders and in the form of that dividend. So what does the rest of it look like? So the PE is just 8.9. They have a PEG ratio of 0.6. And 2023 earnings expected to be up 15.3% and then up 6.4 in 2024. They also haven't missed on earnings in the last 5 years, which is impressive because we did have the pandemic during that time period. Year to date, the shares are up 21.3% versus the S&P 500 up 16.2, so slightly better than the S&P 500 now. So if you're looking around for a way to play the adult education and what is going on there, the labor shortage means a lot of people are going to go back and get training in certain areas, say like nursing. That area should remain strong for a lot of these companies in these areas where there are labor shortages. So something to keep in mind, but tune into those conference calls as well. But this is PRDO Education, PRDO is the ticker. And that is one that was not on the Graham podcast. The second one, this next company it is Richardson Electronics. Remember them? Ticker RELL. R is in Robert, E is in Edward, L is in Larry, L is in Larry. They do pay that dividend as well, yielding 2.1%. Market cap, remember this, they're very small. It's almost like a micro cap type company, just 168.3 million. They do like global infrastructure for tech, in the tech realm. So I called them kind of a tech company on the Graham podcast because they have that kind of bent towards that. They got a great, strong balance sheet for full year 2023. In the fourth quarter, they had cash and cash equivalents of $25 million and no debt. So that's always, key. And that's probably why it shows up on this Buffett screen as well, both Graham and Buffett. And remember, Buffett was a student of Benjamin Graham, like literally his student, and then he went to work for him. So, they have the same kind of outlook, and they look for the same things in companies. And so this, the good free cash flows and not necessarily no debt, although this company has no debt, but the low debt, the good, strong balance sheet is what Buffett normally looks for. Earnings, though, expected to decline 30.2% this year. And remember, they only have one analyst. We only have one here at Saks.com. So that one analyst is kind of determining everything in terms of what's happening with the earnings revisions. But next fiscal year, expected to be up 95%. So that's a little bit, up and down, very volatile. I'm not sure why that is. You're going to have to listen to the conference calls here. Sales are expected to be up for next year, 25% as well, with those earnings going up. So something maybe is developing or coming on board maybe in the near term future. Year to date, however, these shares are down 44.6%. That was the big conundrum when I talked about it on the Graham podcast. The street just really doesn't like these shares, but it's cheap with a forward P of 12.1 and a PEG of 0.6. So I'm not quite sure why it keeps selling off, but I would definitely want to check in on the conference calls on this one. And that is Richardson Electronics, ticker RELL. And then the third stock is the home builder. And this is the one I also talked about on the Graham podcast. I really didn't plan it like this. I should have talked about, something else. And then I would have had some fresh picks for the Buffett podcast. But that's just the way it rolls. And so there must be something in it that they both are showing up with the home builder. And the only one on both of them was KB Home, ticker K as in Kevin, B as in boy, H as in Harry. And as we know, the home builder stocks have seen the big rally. Year to date, it is a little bit off of its highs recently, however, but year to date still up 54.5%. It does pay a dividend yielding 1.6%. And earnings, though, for fiscal 2023 expected to decline 31% because last year, as I mentioned, and I've mentioned forever with all of these home builders this year here in 2023, they were having record years last year. And that was off of the demand off the pandemic, the low mortgage rates. But once those rates spiked last year, but they didn't really spike until late spring, early into summer, then the market froze up. But prior to that, earnings were very good and they were on this record earnings streak going on. That they've come well off of that, but these earnings are still strong, still, ranking up there versus even just a couple of years ago. So the street hasn't really punished any of these home builders for that. Their margins have remained elevated, and that's all the street is really concerned with. But next year, analysts expect a little bit of a rebound, up 9% on the earnings for next fiscal year. And we'll see what happens with that. PE is just 7.9, and it does have a PEG of 1.1. And remember, PEG ratios, you look for under 1. 1 or under is the true classic value. And that means that, it's pretty cheap, but it's also got growth. So this one's just a little bit out of the realm of that, but not too much. So I still consider this to be close to the classic valuations on the PEG ratio here at 1.1. So that's our 3 stocks. This is a quicker podcast because that's all it's giving me, but that's all that Buffett has to choose from right now, apparently. And as we know, part of his problem is he and Berkshire Hathaway are so massive, they wouldn't even consider, I don't believe, investing in someone like Richardson Electronics with that market cap of 168.3 million. I mean, they could buy it out, but even at that, they're not really, wasting much of their cash at all. It's just going to be a drop in the bucket for a company like Berkshire Hathaway that instead is buying, billions of dollars worth of shares of Occidental or Chevron and has that huge position in Apple. And so something like Richardson just isn't really going to cross, their radar anymore. But that's also one of the reasons why I feel Berkshire Hathaway cannot do anymore what it used to be able to do 30 or 40 or 50 years ago. These kinds of stocks are maybe stocks that would be for a younger Warren Buffett and an early in the growth story for Berkshire Hathaway, where they didn't have as much cash just sitting around and they could still buy some of these smaller cap companies. But you don't have these kinds of restrictions. You can look for small cap value. Berkshire mostly can only look for, mid to large cap value now. Occasionally, we see the lieutenants buying a smaller cap company like they did with RH, the furniture retailer, a couple of years ago. They bought some shares of that, and that's not like a huge company, but they're not 168 million, market cap either. And they are bigger than even $1 billion market cap. So, and they actually have sold that whole position now. But even RH, again, it was really just a drop in the bucket compared to the other big positions that they have. And remember, though, Berkshire has bought some of the home builders in the recent quarter. Those were some smaller positions. They bought into 3 of the home builders. So the screen giving us a home builder stock does kind of follow along with what Berkshire has been doing recently. All of the home builder stocks are cheap. And just recently, I was looking at the list of the Zacks #1 ranks on the home builders again. And those estimates are back on the rise again, even with mortgage rates back above 7. And there was something like 9 or 11 home builders that were #1s, and that's out of like 16 home builders. So basically, it's good to be a home builder right now, and the Zacks rank is reflecting that in the high Zacks rank with all of those. But they are moving kind of as a group. We are going to hear from Lennar this week here in September. They are reporting September 14th. So if you're listening to this after that, go check out what their earnings report is, because we haven't heard from anyone in a couple of weeks. And it will be interesting to see if, once again, the home builders are seeing any kind of slowdown now that the rates are back above 7, or if, buyers are moving to the sidelines again, as we saw last fall when they did this same move above 7 activity. So check in with each of these. KB Homes will be coming up soon as well. Again, they're one of the kind of earlier reporters in the next cycle for earnings. So I'm going to be tuning into all of these to see what's going on with housing as always. So let me recap the stock tickers again. We had PRDO Education, the online but also campus-based adult education company. PRDO is the ticker. Then we had Richardson Electronics again. They had no debt at the end of fiscal 2023, ticker RELL. And then we finish it up with KB Homes, dirt cheap as always, ticker KBH there. So as always, I'm trying to bring you as many value stocks as I can, but the screens have got to be helping me a bit. And I'm going to take a look at some of those other screens that are on there. Peter Lynch wasn't really a value investor per se, but kind of. You could couch some of what he did as value. So I might take a look and kind of see what that screen is, because we've never run it here for the Value Investor Podcast. And why not? Why not see what the Lynch type of screen would be? And if you don't know Peter Lynch, he used to run Fidelity Magellan Mutual Fund and was considered one of the greatest mutual fund investors of all time, I would say, with just a tremendous track record when he ran that fund. But he did leave it in the early 90s. So it's been a long time since Peter Lynch has been, in the game. But that doesn't mean his strategies might not work, and even for us value investors. So be sure to tune in. Join us here at the Value Investor Podcast. You can get us on Apple. We're on Spotify. We're on Amazon Music. You can also get us on our YouTube page. Go to Zacks Podcasts. Put that in the search bar. Get us on YouTube, but get us somewhere. And I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.